The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum, investing in Jamaica.
Good evening, ladies and gentlemen. Welcome to yet another Mayberry Investor Forum. I'm your host, Dan Theok, Senior Vice President of Investment Banking. And today we'll be talking about Caribbean Producers Jamaica Limited. With us, we are joined by Mark Hart, the Executive Chairman, and Tom Tyler, the Co-Executive Chairman. Welcome, Tom and Mark. Thanks for being with us.
Thanks, Dan. Nice being with you, Dan.
Very good.
Good evening. Good evening, everybody.
Additionally, I'd like to send my apologies for our CEO and Chairman, Chris Berry, and Gary Parrott, who unfortunately will not be able to join us today. If you're a fan of the content, don't forget to subscribe and stay up to date with all of our uploads. Be sure to hit the bell to receive notifications. We publish videos like this just about every week. And if you're looking to embark on your very first investment journey, take that first step with Mayberry Investments Limited. Follow us on social media today to get started. Great. I want to tell you guys a little bit about CPJ before we do the formal introductions. So CPJ's major business model includes food and beverage wholesale and the distribution of non-food supply distribution and the delivery of fresh meats and juices. Since 1999, the company has been producing juice concentrate and slush for the hotel sector. It subsequently moved into retail commerce under the Carryburst brand. CPJ debuted on the Jamaica Stock Exchange on July 20th, 2011 as a part of their plan to grow into new enterprises and markets. In 2014, the company formed CPJ St. Lucia, a joint venture with the Dubé family, the former owners of the Dubé Bottling Company. CPJ St. Lucia began operating a 25,000 square foot warehouse in Castries as a food service distributor, selling products including produce primarily to the St. Lucia tourism sector. CPJ provides specialized services such as beverage systems, merchandising, and its CPJ market. Let me tell you a little bit about the gentleman we have with us today, starting firstly with Mark Hart, who is the Executive Chairman of CPJ. He brings to the company his years of experience and management, and this comes as no surprise as he previously served as its CEO from 2004 until early 2011. Mark began his career at the Hart Group of Companies in 1982, eventually becoming the chairman and CEO in 1997. He's a founding shareholder of CPJ, which is a company currently listed on the JSE. Now, Tom Tyler, Tom's also a founding member of CPJ. Mark and himself formed the company, of course. And he served as the CEO from 2011 to 2016. Tom is currently the company's co-executive chairman, where he maintains strong vendor and customer relations. Following his education at the University of South Florida, Tom joined his family business called Caribbean Producers, and that company specialized in the supply of furniture and equipment to the hospitality sector across the Caribbean. He later had the vision to create an integrated distribution company, and that led to the formation of CPJ, which he co-founded with Mark in 1994. So once again, Tom and Mark, thanks so much for being with us.
Thanks for inviting us, Dan.
Good deal. Well, first up, I want to start with my own independent review of the performance of CPJ for the 9 months ended March, and then thereafter we will jump into some Q&A. We've got some exciting Q&A, folks. And I want to thank you guys for all tuning in and the subscribers and the views. We're getting up to 10,000 views, and it's great. And we're getting views from all over the world. I especially want to welcome folks from Toronto, you know yourselves. Okay, so first up, I want to do the review of CPJ third quarter results. And then, as I said, Tom and Mark will jump into a little bit of Q&A. And of course, folks, I want to declare our interest. So Mayberry, through its subsidiary MJE, is a top 5 shareholder in CPJ. We own about 20%. And we also have two board directors in the form of Chris Berry and Mark Berry, who sit on the CPJ board. So CPJ are no strangers to Mayberry, but I assure you that that will not form any bias in my independent review and analysis of CPJ. Spoiler alert, I love the company because of how well positioned they are in the tourism sector, but let's look at the numbers. I'll need my glasses to help me with that. So for the 9 months ended March 2023, we see revenues up by 24% to 107 million US dollars, and all of the numbers presented are in US dollars because it's a company that earns a substantial amount of its revenues in US dollars, and its functional currency is the US dollar. So revenues up by 24%, gross profit up to 31.7 million, up by 15%, and that's a gross profit margin of approximately 30%. Selling and administrative expenses up 34% to $19.6 million. So we see the SG&A outpacing the growth in revenues, and we'll definitely be asking a few questions about that. The net result of that was a fall in the operating profit to $7.5 million, despite 24% growth in revenues. And then the final net profit attributable to shareholders of $3.5 million, a 47% fall from the prior year. Interestingly, this net profit margin is a 3.6% net profit margin compared to 7% in the 9-month period before, and roughly 6.5% for the full year's audit. So definitely seen a little squeeze on the net profit margin, and we'll be talking a bit about that to have a better understanding of that. Pretty good interim results, good MD&A. So when you read through that, one of the first things we recognize is they did take a $1.4 million extraordinary hit in relation to some long outstanding assessment in relation to duties, which they settled with the Jamaica Customs. So there is $1.45 million of non-recurring expenses that impacted this bottom line. So if you adjusted for that, you'd probably have a $5 million profit and a 5% net profit margin. So still not quite 7%. And once again, we'll be talking a little bit about that. The asset side, good growth in assets, 10% growth in assets, up to 86 million US dollars. And taking a deeper dive into the assets, it's good to see an asset-rich company. So they've got 40 million US dollars in inventories, which represents about 100 days of inventories, $18 million in receivables, which is a good improvement on their collection in receivables from 60 days now down to 45 days, and 20 million US dollars in PP&E, or right of use assets. Additionally, they have total net debt of about 20 million US dollars. And when you consider that their EBITDA is about 16.5 billion, it means their debt to EBITDA ratio is about 1.2 times, so well under 3 times. So, and also with shareholders' equity up 34% from 22 million to 29.8 million. Again, you can appreciate the total net debt of 20 million is less than their equity of 28 million, so less than a 50-50 ratio in terms of debt to equity. So by all standards, they're carrying a healthy level of debt, making reasonably good profits, 3.6% profit margin. I'd like to see that get up to 6 or 7%. We'll definitely be talking about that. But all in all, it's great to see the company continuing to do well coming out of the pandemic. Last year, turning a largest profit ever in their history at $7.7 million for their year ended June. So that was to June 2022, 7.7 million. And here we're seeing in the 9 months thereafter at $3.5 million. So we'll talk a little bit about expectations for the full year. I think it's apparent to me that they're unlikely to get to 7.7 million. But I think when you make the adjustment for the extraordinary item, I'd be surprised if they didn't get to 6 million US dollars. And then we'll talk about the prospects for growth for CPJ with tourism coming back 100% and growing. Looking at the key statistics, we can see the share price is at $9.45, which translates into a 16 times PE. So that would be trading a little bit rich relative to the main market average of 10 times. But if you take out that $1.45 million extraordinary expense, you'd have an adjusted PE of 12 times, which I think is reasonable given the significant growth potential expected from CPJ. And I think you guys will agree with me after you've heard the discussions for today. Total market cap, $10 billion. And so CPJ, having listed in 2001, no, I got that wrong, 2011, have now matured. They're no longer under the junior market and benefiting from any of those tax breaks. In fact, last year, in last year's audited financial statements, we would have seen them experiencing full tax charges for the first time ever. And so this is the second year when they're facing full tax charges, which is why I'm using references from the main market in terms of discussing how I feel about CPJ from a PE perspective. Next slide. We can look at what's been going on with the profitability of the business, and we can see, throughout the pandemic, they really got hammered as tourism basically shut down for, 2 years. And I'd guess about 80% of their revenues come from tourism, so it was a big deal with the pandemic. Post-pandemic, what we're seeing here now is the 10th quarter in a row of profitability, albeit this last quarter being less than usual because it includes the netting of the $1.45 million extraordinary expense in relation to the customs duties assessment I mentioned before, which related to 2011 to 2016, I want to say. So it's something from 4 or 5 years that was being discussed, disputed, now fully resolved. And so we see that impacting the last quarter's profit. I expect them to be back to business as usual going forward, and we should start to see, in my view, quarterly profits of at least, close to $2 million a year, annual profits of at least $8 million a year, my expectations, and then see this business growing tremendously as we see hotels coming online, over 6,000 hotel rooms under construction, as we see tourism continue to grow. And again, we'll be talking a little bit about that so you guys can appreciate that. Next slide shows what's been happening with the trading in the stock price. And so this is my favorite stock in the last 2 years for sure. Throughout the pandemic, this stock traded at a low of $2, and you would be crazy if you didn't buy some at $2. Previously, prior to that, it had traded in the $4.55 space. I bought the stock 5 years ago at $4.50. And so when we saw it down at $2, we were saying, guys, this is a buy, especially at the tail end of the pandemic. I went and sort of tripled down on it at $4.50. And, within a year, it peaked at $20, $22, then traded back into the $14 space. And now, in the high interest rate regime, year to date, we see, in general, most of the main market stocks pulling back by about 20 to 30% because of the high interest rates, and a lot of people are sort of holding and waiting. So you see lots of stocks out there this year trading down 20 to 30%, including giants like NCB and whatnot. And I, just like how I feel about NCB and many others, this is a stock, that I believe by year end that will trade back up by 20 to 30% as interest rates start to go down, as those 6,000 hotel rooms under construction start coming online, and as we see the revenues and profitability of CPJ growing substantially. So my independent views on CPJ, I still think it's a buy. I think it's a good buy at $9.45. I'm looking to see the stock up by 20 to 30% in the next 6 to 9 months. Well, that's it for me. Let's jump straight into our Q&A segment. Folks, I want to remind you, if you have any questions, feel free to send them to us, and we'll address them throughout the program. I've got some set questions I want to cover, and we'll have a nice interactive discussion. So, guys, what do you have for me? First question, can I see it on the board? Good. In your most recent financial filing, your selling and administrative expenses increased by 34%. Can you explain to us what caused that increase?
Sure. Dan, first of all, I'm very happy that you made a nice pickup on your stocks. And we agree that, you can have good expectations going forward with all that's happening. But before I answer your question, I'd like to just clarify the one-off charge that we had for the last quarter, the tax. It was not duty. It was actually general consumption tax. And CPJ has a very complex import regime. We sell about 4,500 items. I think it's more than any distribution company in Jamaica by far. And there were a lot of changes happening in taxation. So We missed some output tax. The company did not benefit from that. The customer did. However, we didn't charge a tax, so we had to pay that, but it was not a duty.
In that time period, Dan, within 3 years, there were 3 different tax regimes and tax changes in certain categories that we were operating in, and manufacturing, EIA, then manufacturing, and then omnibus. And
so there was a lot of changes.
A lot of changes and complications. So,
right.
Unfortunately, we sort of got caught up. We didn't catch it, and we had to take care of it finally.
No. Anyway, and then the other thing I wanted to just settle with you. You said the company has 20 million in debt, which in relation to our assets, you said it's not much, but the difference with a company like CPJ versus a typical distributor is that CPJ is a commodity trading company. Therefore, if you look at our payable, it's very low, right? So we make deals on commodities, and we have to pay sometimes long before the goods even get to Jamaica. So, we have great relationships with our vendors, but just in the nature of the business. So our payables are very low, but we do rely on some credit to finance the business. But let me go to your question regarding the administrative expense increase. We have started to really focus on building out a sales team. Tom will speak to you a little bit later about some of the initiatives and the products that we're adding in our portfolio. But we have added over 50 people to the staffing of CPJ, and that in itself has increased our overall salaries by 15% year on year. The sales team was increased by 40%, and then operations was about 29%. So really what we're seeing is that we're gearing the company for that growth that you're seeing now, the 29% growth. 24%. And we expect that to continue to accelerate, and we're putting boots on the ground to match the technology that we're put in place. But we need, we're a relationship company. So we have people on the ground, and that's really the bulk of that. There are other increases like local travel increase, coming out of COVID now, we have a lot of people moving up and down. And also there was some rental increase and general expenses. But most of it, Dan, is our sales, pushing sales and bringing new people on board, which we expect will translate very nicely to us in the next coming year ahead of us.
Pre-COVID, Dan, we had 440 people staffed in Jamaica, somewhere around 440 people. During COVID, I think we took that down to about 280 people at the bottom when we were going through those bloody 15 months or 5 quarters of COVID. So coming out of COVID, obviously we were lean and tight, and now we've been staffing up, and that, as Mark said, we're increased our costs there.
Good deal. Thanks for that. And that leads me to a natural follow-up question for you, Tom. So you've grown your sales force by 40%. I've been hearing about new products and lines and things coming. Can you tell me a little bit about, what's coming, what's in the pipeline? I've heard about something called Fireball, and I know you guys are Hispanic. What can you tell me?
Heard about Fireball?
I've heard about your cinnamon whiskey.
So as Mark said, we deal in a lot of different industries. One of the more fun industries is our branded beverage business. So in our spirits line, we've had great relationships. We've been with Bacardi for 22 years, Brown-Forman for 24, Remy for 20. We represent Tito's, which is #1 selling spirit in the United States, Terramana. So we've been adding to that list coming out of COVID. And recently we took on the Sazerac portfolio, which has the number 2 selling spirit in the United States, which is Fireball. It also has a liqueur line. It has Myers Rum, Southern Comfort, a full line of products. So just adding on top of our spirits line. So we expect some very strong growth in that category, our spirits category. In imported spirits, we are by far the number 1 importer of those type of products. Obviously, our wine line, I spent the last 6 months traveling sort of the world, went to Dusseldorf to Pro Wine. So we are adding some additional wine lines for the upcoming season, sprucing that up, making it more fun. We represent a brand called Josh, which is the number 1 selling California wine in the United States, does about 5.6 million. And now we picked up something called Bread and Butter, which is now in number 3 position in the U.S. as a California wine. So we're very excited about that, and we've expanded that team from 2 to 4 wine specialists. I think we'll go to 5 there to get full coverage.
So tell me, Tom, how big is, so when I think of your business as a, business that's doing $120 million in sales, US, $10 million a month, I mean, give us a feel for, what's coming from the hotel sector versus retail, and maybe a few big categories. I mean, how big is wines and spirits and alcohols versus food versus beverage? Give me a feel for what makes up this $120 million of sales.
So, okay, well, number 1, pre-pandemic, we went to market a little bit different than we're going post-pandemic, right? Okay. So we have our large institutional customers, which are the big hotels, which we're the best at that. Then we have our on-trade, bars, restaurants, local type of what we call on-premise. Then we have our retail trade. And then now we have our stores that we've built in Jamaica, right?
CPJ stores.
Yeah, excuse me?
CPJ stores.
CPJ stores, CPJ markets. So our mix has changed.
Okay.
Our model has actually changed coming out of COVID. We learned we wanted to swing it to the other side. So I would say we're 70-30 right now, but we're really making an emphasis to grow on the local trade with our branded beverage and other products. And I think we'll continue to focus on having a better mix of local compared to on-premise. Now, saying that, with what's to come with on-premise, our on-premise business is going to grow as well. I mean,
6,000 rooms, a lot of rooms.
6,000 rooms are coming. And we can talk about that a little bit later. We have a timeline on when they're going to hit and how that's going to affect our business.
So tell me, Tom, it's a good time to ask the question. There are 6,000 hotel rooms under construction. You're doing about $120 million of sales currently, $10 million a month. I expect those hotels to all be online in the next 2 years. What could this mean for your revenues in 2 years' time? Could you give me your best guesstimate as to how your $120 million in revenues could potentially grow?
Number 1, they won't be on in the next 2 years.
Okay,
so let's not hold our breath on that. Obviously, Sandals did an amazing job on Dunn's River and reopening 250 rooms that were taken out of the system.
Right.
And obviously Sandals has, plans to extend that to another 250 at Dunn's River.
So how much do you expect in 2 years, and how's that going to impact your revenue?
Well, what's going to happen? The next wave will be Princess Hotel. That'll be first quarter of 24, and Rio will be first quarter of 24. So we're going to catch that on the back of our next physical to get business from that. That'll be about 1,800 rooms.
1,800 in the next year. Okay.
Yeah. So about 1,800 rooms that'll come on in 24.
Good deal.
I would say
that's 10 million.
Yeah, it's about 10 million in sales.
10 million per annum.
The 6,000 rooms, we can equate to about $30 million in additional revenue.
Got it.
organically from the growth of the rooms.
Got it.
Yeah, go. You have a question?
No, I said got
Yeah.
it. So 30
Got
million roughly
Yeah, yeah,
from the
right.
from
But
the
but I think that
6,000
that's all
rooms.
going to take until 25 to 26 to all be said and done on the 6,000. Now there's more behind that 6,000 that we're hearing about. So it could be 10,000 rooms by 26, 27.
And Dan, what also is happening? There's a phenomenon in Airbnb right now, right?
Yeah.
The circles are saying that it's up to 30% of all the arrivals, right?
Right.
Everybody renting out rooms, and that all just adds to our sales.
Right.
So,
And obviously the stores are feeding into those villa rentals and to the Airbnb, as well as premium local consumption.
Well, good deal. And how are the CPJ stores doing for you, or the CPJ markets? How's that been
This-
going?
finally found the formula, Dan.
Good
We
deal.
finally found the formula.
Right.
We've with the spirits portfolio that Tom just mentioned, and then we put some real focus on those stores, dressing them up with stuff that we import just for those stores, making ourselves different from we don't compete with the supermarkets, right?
Right.
Because we supply them. So we really are making them very attractive for the hospitality, the small business people, villas, and they're really starting to perform for the company.
And our B2B and our B2C platform to buy through the store helps even more through the website.
So I'd love to see the expansion in that area. We're looking already at some other places.
Yeah.
Can't tell you yet because
Right.
Yeah.
Right, but we're definitely going to do more in Jamaica, and we'll keep them in the West.
Got it.
Forget about the.
So speaking of Jamaica,
that's our territory.
Speaking of Jamaica and speaking of the West, I'm just going to try to keep it flowing. I noted St. Lucia. St. Lucia is a business. Makes up about 17% of your revenues, if my numbers are approximately right. Hey, tell me a little bit about St. Lucia and what's happening there and what your expectations are for
Okay,
St.
well,
Lucia.
St. Lucia's doing very well.
Yeah.
This year we're having a very, very good year. They had a little rougher time through COVID. The comeback on tourism was much slower there.
Mm-hmm.
And we'll finish the year about 28 million in St. Lucia. But there's no more hotels being built in St. Lucia right now. So during COVID, we built our first store, an 8,000 square foot grocery store there, and that became a success.
Very different from the store we have here.
Right. They're not. We call them CPJ Fresh Markets there, and that's a full grocery store in St. Lucia.
Right.
In St. Lucia, grocery stores are monopolized by one entity. They have 13 grocery.
We won't say who it is.
They have 13 grocery stores.
I would guess Neil and Matthew, but I could be right.
Right. Yeah. So they have 13 grocery stores there.
Right.
And we don't supply a lot.
We don't supply them. They basically import and do their own thing there.
To compete.
So we are doing now in Capex. We're building our second store. The second store is about 15,000 square feet, 12,000 square feet in the front. It is in the most amazing location. It's been
brand new building.
428 parking spaces. Wow. And we believe that store will do about 12 million a year, 12 to 14 million a year.
Wow.
So take 28 and add 14 on top of it. We're going to turn into a $42 million business.
And the margins are not bad in the supermarket business, as you may know.
Absolutely, absolutely.
Affiliation with one of them, right?
So our store there is 3 minutes away from 3 of our competitors' stores in Rodney Bay, the most affluent area. It's a gorgeous building. I just was in Miami with our designer for the stores that's been doing all our stores. And we hope to have that open by the end of the year. And it's very, very exciting.
Okay, excellent. All right, I did have a CapEx question for you. Basically, I know your board's approved a huge CapEx spend for the year. Tell me a little bit about what that means for the company, what you guys plan to do.
we have 3 Capex
It's
projects.
exciting, you know. Tom's been wanting to do these things for a long time, and I've had to hold him down because, you know, timing is everything, right?
Yeah.
But with all the expansions coming,
Well, and also
time is right.
we wanted to get our balance sheet right and our feet underneath us after COVID before we went and started spending money, right?
Absolutely.
Uh,
So,
so
tell me about the Capex and what do you plan to do?
number
How's that going to
number
impact the
one,
business?
number one, we're going to put 1,000 kilowatts of solar on one of our buildings in Montego Bay.
Okay.
About $1 million spend on that. Its repayment is 3.2 years. You know, it's sort of a no-brainer to do that. So we're moving on that. The second is we built our processing facility, and it's 12 years old, and we has a little age on it. So we're spending about $2.5 million in upgrading a lot of equipment, and we think that we will be able to produce about 3 times as we're at cap on production. So I mean, we're having to turn away business right now because we can't produce anymore out of our plant. And we believe that we can generate out of the same footprint 3 times as much poundage as we do right now with what we're going to do with automation and equipment. So that project's in process. I would say that'll be done first quarter of next year, 24. That will also give us the capacity to export. When we first built the plant in the early days, before we, you know, we're at full capacity locally, we exported product. So we're excited about that, so we can export back into the CARICOM. And then the third project is St. Lucia, which is a $3 million spend. It's a split spend between our partners, the Dubilies, and we think that is a game changer for St. Lucia as far as profitability to the bottom line.
And Dan, we're already planning Capex for the next 2 years, but we're not going to speak about that today.
Right.
Okay.
So
That's fine.
I think
some exciting projects that we're looking at, which are going to revolutionize the company.
So
we have a lot.
Yeah. So we feel that all 3 of those projects will bear fruit very, very quickly for the company, and very excited about the Capex projects. Yes.
Good deal. 2 questions for me follow up to that. So one was on the profit margin, Tom. You know, I like to see the profit margin in the 6-7% space. Would you guys say with these projects, you know, going forward, you should be able to get your net profit margin back up into that space?
Well, number one, we had a lot of gyrations in the beginning of the year with commodity prices. Right. So the second quarter of this year, a lot of things fell out of bed. Right. And I have a saying: you got to know when to hold them and know when to fold them. Right. So we had to move out commodities at losses to get to the right side of the table. When the prices dropped, and we were holding heavy inventories because supply chain was very tight. So that affected our margins in quarter 2 and quarter 3. That's more or less regularized now.
Okay.
And the other side I love is on our branded side, we don't have those swings, right? So we have a decent mix.
So we're seeing
in the margins in quarter 3 and now in quarter 4. So I think everybody will be very, very happy with quarter 4 on the results compared to prior year.
Good deal. Excellent. I appreciate that. And then, Mark, question for you. I mean, how does CPJ fundamentally remain ahead of its competitors amidst such intense competition in the space?
Yeah, it is, you know, and we don't seem to have like a competitor that competes on everything with us, but we do have very strong competitors in categories, right? So we are, obviously, Tom and myself, very, very big on relationships. That's like number one, right? Not just customers, but the vendors as well, right? And Tom manages pretty much all the vendor relationships, a lot of customers, and we share, we tag team, but we do have very strong relationships. We've put technology in place, so that's just helping us be more efficient and, just managing our business. But the bottom line is really, we just need to make value for our customers. We want to provide a setting where they really want to do, they need to do business with CPJ because we're going to drive their success, right? That's been our mantra from day one. We are a service company. Tom and I, and we push that right down to the lowest levels of the company, right? There's nothing that we don't do to try and please our customers within reason. And the reason that is a big bang, I must tell you.
Absolutely. And I mean, with a $40 million war chest of inventory, you guys are carrying 100 days inventory. I know a lot of that has to do with the logistics change challenges, but it's also in terms of you guys trying to you can please your customers, provide them with what they need when they need it as quickly as possible.
And when COVID came, we had 60 containers coming in when the last tourist took off.
Right.
Okay.
That we could not stop.
And the warehouse is full, $25 million of inventory. So yeah, we make sure that, we have it because our customers depend on us. So we make sure we have it.
Listen, if you were a hotel and you could buy 65% of what you needed off of one truck and know that you're getting it every week when you need it, so you can control your inventory inside your hotel, and just think about hotel versus having 20 trucks roll up to get those same 65% of the products that you need. So we cover 65% of the needs. We make it easier. One invoice, one phone call, and reliability.
It's a confidence thing, Dan.
Right.
Customers have confidence. They come here, they meet us, they see our place, we talk to them from the start to the finish.
Right. And when these new guys land in Jamaica, these new hotels, the first place that they come to talk to us. So,
but we're giving you too much now. We're giving away too much.
Well, I know Tom has all the relationships, and it's clear to me, what your strategic advantages are. So you guys are providing good credit terms. You got, all the inventory that these guys need. It's a one-stop shop. You got a great-looking guy in the form of Tom who's got great relationships. Your facilities, you guys are located right on the port of Montego Bay. I mean, it doesn't get any better than that. So that's got to be another competitive advantage you have. So, I mean, when I put it all together, these are some of the reasons why I'm in love with CPJ. And so I know those 6,000 rooms under construction, Tom has already made the relationships and the contacts. And so there's no and ifs or buts as to whether you're going to be picking
every
up
one of them
business.
Talking to us from day one when they're putting the sticks and bricks in the ground. So before they get here, we're holding their hands and helping them. That's our job.
Understood. So we talked a little bit about the 6,000 rooms that are coming in the next 2-3 years. I mean, what's your outlook, longer term, Tom, for CPJ?
Well, number one, 250 million is on the horizon within the next 3 years.
That's your revenue target?
I think
we're 150 with St. Lucia.
Yeah.
I'm talking combined.
Yep.
Right?
Yep.
I believe that we can take it to 250. I agree with you that we need to get back that 6 to 7% net, right?
Yeah.
So that we're going to work very, very hard at that. Obviously we've gone a couple of different ways versus pre-COVID. So we're not just focusing on resorts and hotels. We have our resort and hotel business, which is growing organically with growth of the industry. We have building a sales team to do on-premise local more efficiently. We're adding products that are more generally consumed for the local population. And as the economy does better, the local population has more money in their pocket.
Yep.
So we have some homegrown products that we've brought in now that we're building as well. Fireball will be one of those items that will be everywhere. You'll see it in every gas station, every grocery store, every bar. Just go to your local bar and go to the bar in Kingston and you'll see it now. We've made a great relationship with Sazerac with that. Our retail division, we've expanded that. We've developed a marketing. We've never had a person that ran marketing within our organization. Dedicated. So we have a dedicated marketing manager with a team under him. Obviously, you're seeing that in the cost. So we need to be visual to local consumption. Our stores have been right on. There's a location that we're waiting on that hopefully we'll get in Jamaica. So that's one that we'd have to build greenfield, but in an amazing spot. So we're working on that. Mark wants to do a couple more, so he'd like to have 6 of them. We're at 3 now. So we're working at from a different angle. Obviously, we have a core. We're going to build back our local core, local consumption. I mean, years ago, 2003, 2004, I brought Red Bull to Jamaica. Nobody knew what Red Bull was at that time. That turned into a $25 million brand. I told Mark when I was working on the Fireball deal, I said, Mark, this is our new Red Bull, right?
Did you say number 2 in North America, Fireball?
Fireball is number 2. We represent in the top 5 spirits brands in America 4. Number 1 is Tito's vodka, which we do a great job with, but it's expensive for broad distribution.
Upscale, yep.
Fireball in the U.S. just jumped to number 2 spot. It's everywhere. Then there's Smirnoff, which is falling off. Then Bacardi, which we represent Bacardi brands, but Bacardi's right. And in the top 20, I think it's 13 of the top 20 that we represent of the top 20 brands in spirits. So in premium spirits, we're definitely in a very good position.
So
the
Tom,
other thing is,
Tom, I got to ask this question. I mean, because you've got such a diverse portfolio, expanding many categories. I mean, you got to tell me which category do you believe has the most potential for your CPJ's arsenal?
We don't pick favorites.
we won't pick a favorite tonight, Dan. But I've got to tell you, we got a lot of roots in the ground, and they're all growing very, very strong. So if you have a tree and it has one root down and the wind blows, it can knock it over, right?
Right.
Our roots spread out broad, so when the wind comes, the tree may bend a little bit, but it holds up strong because we've got these roots going out all different ways. Obviously, we have competitors within categories, but we don't have any one competitor that has the basket of products that we have. That's what makes us so valuable to the hospitality industry. But I believe our retail division has tremendous upside because we're starting from a very lower base, right? We don't want to be commodity. We want to be premium, and we want to have recognized products. So,
okay, good deal. I appreciate that. Last one for you, Mark, before I jump into social media, because the questions are coming in like crazy. We talked about the categories. We talked about Capex. Tom alluded to the plant, and I think that's your meat processing plant, your facility plant.
We won't say what it is a plant of.
I know.
It could be other things. It could be it's a processing plant.
Understood. And I got a question coming here. And so in my mind, one of the categories I think you guys do really strongly in, and this one was surprising when I first learned this a few years ago, is bacon. I get the sense that between you and GK, for instance, you control, 80-90% of the bacon market in Jamaica. Is that accurate?
Got CD out there as well. The 3 big players. So we're just growing. We're taking our piece. That's all. We make the best bacon though. That's undisputable.
Undisputable is our bacon is the best bacon.
Naturally wood smoke. We don't inject any smoke flavor.
There's 2 different ways to make bacon. There's an enhanced liquid smoke, and then there's a real wood chip burners. When we built the bacon plant 12 years ago, we built it with wood chip burners. So our bacon, hickory smoked
Hickory
bacon
smoked bacon.
from real wood chips.
I can testify you've got the best bacon in the market. I appreciate that. All right, let's jump into some questions from social media. First one coming in. First question's a complaint that we're not asking enough questions from social media. So let's start with the first one here. With stopover arrivals set to make dramatic increase in 2023, how is CPJ positioned to take advantage of this increase?
Well, I think we've been talking about how we're taking advantage of it already.
Yeah.
I would say our key focus is to train and keep on training our staff and developing staff to be able to take on the additional business. We have the products, we have the location, we have the operation, we have the systems in place for the first time. I can press a button and get information within seconds on what's going on in which category, where, whatever. And so it's training and adding those people on and getting them up to speed. One thing I say to Mark is, you can hire them, but hiring them is just the first part. You got to hire somebody, and then you got to train them and get them up to speed. Sometimes you bring somebody in, and in 3 months you're feeling it, and sometimes it takes a year. It just depends, and that's the gamble that you take, right? So training to be prepared.
Good deal. Another client that I like, Express Catering Limited. I mean, they capture the stopovers, and it's another sort of food-driven business that depends a lot on tourism. Would you happen to be a supplier to them by chance?
We're a very big supplier to them. You should go to any one of their locations, and you'll see a Fireball shot machine.
Yeah.
We just installed 14 machines in all their areas, including the new bar in the airport.
Sanctus International Airport.
Yeah, so they're very, very good customers. Ian and Mike are very good friends with Mark and myself. I mean,
we drink tea every day.
We drink tea every day, and I'm very happy for them because, similar to us, we all had a very rough 15 months to come out of this pandemic, and they seem to be doing very, very well now.
They're bouncing back strong.
Rivals.
Absolutely. One more question coming in from a Lion Jungle. Is CPJ keeping an eye on the economy and the climate in Europe, USA, and Canada to protect against any possible downturn that it might have, and maybe its impact on commodity prices, I'm guessing?
Yeah, I just went to an event in St. Louis, Missouri, not my favorite place. And there was a speaker there, the CEO of a $13 billion logistics company. And it was extremely interesting. Supply chain still having its hiccups. Prices are not receding overall. The manufactured food products, commodities swing for supply and demand and weather, etc. But they don't see a pullback in the U.S. as of yet. So that thought of recession, they keep on pushing that out. So it should be very interesting. But the other thing is when Jamaica, when we went through the last financial collapse in 2008, 2009, Jamaica kept on humming, right? We're near shore, meaning easy to get.
You can make a 3-day vacation.
You can make a 3-day vacation, and we're cost effective. And if you look at it, all the major players, Hyatt, they bought AM Resorts. Marriott, they want to get in the all-inclusive business. Resort travel and people spending money for experiences versus hard goods is more important right now. So the travel business is extremely strong right now. Extremely strong.
Good deal. And I concur because, I mean...
And I have one more thing I want to throw at you.
Sure, Tom.
And I'm
sure,
surprised you haven't asked me, right? Because it's been in the press, right? CPJ would like to sell to the cruise industry.
Yes.
So we set up a company called CPJ Homeboarding Limited. We got our JC's license, so we're licensed under the Special
Special
Economic
economic zone.
Zone.
Excellent.
Okay. And if we can work out the policy issues that we're having right now with the policymakers, and we're trying to do that, that market is massive, and that $250 million that Tom is speaking about may come earlier than.
You weren't supposed to tell him that yet. That's the one you were supposed to keep in the
And what
pocket.
it will do, and what it will do,
CPJ home porting.
Home Porting Limited, and what it will do is allow us to aggregate everything that we do for CPJ in the food service environment. Plus, we can go to True Juice or Separate or Grace or Mussins or whoever and add products that are made in Jamaica to whatever we already have and offer packages to cruise ships that are begging us, literally.
We have the cruise ship lines ready
Ready to
to
go.
ready to do business.
Ready to
It's a matter of the SEZ and being able to operate it.
Yeah,
and work with
we need a third party logistics arrangement.
Right.
Gone through all of that. We're trying to get that ironed out.
I think we're very, very close on that. Also, that gives us the opportunity of manufacturing. Last year this year we'll export about $3 million of our beverage system products, our slushes and our juices, to the Eastern Caribbean. Obviously, with the additional output of this equipment that we're going to put in, we'll be able to export the other stuff that we process. And if we can add also to export items that we bring into Jamaica from all over the world into that package, we could be an exporter or a transit point for the Eastern Caribbean, which could make a big difference in our business.
Absolutely.
So it's something that we're working on.
Great. Well, sounds like exciting things ahead. I got one more question coming in from social media, and it's the Tavares asking about, can we expect a raise in the near future?
A raise?
I think he means a capital market raise or the debt raise or an equity raise.
Yeah. I mean, we had planned to do a major acquisition prior to COVID, and then it dragged into COVID, and then the whole financial markets went upside down, interest rates unprecedented, high, and we were going to do a combination of a capital raise. The market right now is not great, Dan. I mean, I know you guys went out and raised a lot of money, but that's a lot of short-term sort of finance type money. We don't have the appetite for those kind of rates, unfortunately. So we'll wait a little bit to see how the markets are going, and then we'll come in.
One thing I have to say is when you're not asking for money, that's when people want to come and give it to you, right? So,
but definitely there's something in the near future. We're just watching the markets right now, Dan.
No, understood. But you got your Capex for the next year covered. There's no need to finance
that. We're using internal, and the banks are being very supportive as well.
Understood.
Right. And we don't have an appetite for double-digit interest rates. No. We don't have an appetite for high interest rates.
Understood. And I have a feeling, 6 to 9 months, we're going to see interest rates coming down substantially, which you guys will benefit from as well too, in terms of your $20 million of financing. So, yeah, I think that's a good strategy. Let's focus on building out the Capex over the next year from the internal resources, growing the business, and it sounds like there's great growth coming. And over the next 2 years, with the hotel rooms coming online, plus these additional products, I've really got to go try me some Fireball, Tom, to see if this what is it again? Cinnamon whiskey, to see if this
cinnamon. It's a cinnamon whiskey, yeah.
Yep.
Yeah.
I'm definitely gonna be trying me some of that cinnamon whiskey.
It's very smooth.
I'll be trying it. Well, good deal. Well, Tom and Mark, I really appreciate you guys giving us some insights into what's happening over at CPJ, and I've got to think that my listeners are going to agree with me that this is a business that's poised for growth, very critical to the tourism sector in Jamaica, and tourism's sort of critical to our overall economy. And you guys are just, purveyors of choice. You've got such a wide range of goods and services, foods, beverages, liqueurs, etc., that it just makes sense for the hotels to be working with you. And I know you've built these relationships over 30, 40 years, and you've been doing this for a very long time. So thanks for what you do, and we look forward to improved returns. I'm really looking forward to Q4 numbers, which is your final numbers. So we expect to see those in August. And hopefully we'll have you guys back later on in the year to talk about the great Q4 that was. And, we're definitely going to always be
We're
cheering for you
looking
guys.
forward to it too, Dan.
Thanks for the support.
Thank you for the
thanks
support.
for your audience's support.
Always,
And
always,
with-
always.
Yeah.
to deliver.
And
Yeah,
Tom and I have a bet that the stock's going to be north of $14 by the end of the year. So it'll be interesting to see how that plays out. I think it's going to happen.
Listen, Observer Awards, flamethrowers or blowers, Fireball. Be there
Oh, great.
or be there.
Come to CPJ.
Come to CPJ booth. You'll know all about Fireball that night.
Absolutely. Look forward to seeing you guys there. Well, folks, that's all the time we have for today. And that brings our discussions to an end. I'd like to thank our viewers as usual for turning in and for their support as usual. Big thanks to Mark and Tom for joining us today and for all the insights that they provided towards the programs. I'd like to thank you guys for your contributions, for your questions. To our viewers, be sure to look out for updates on our virtual investor forum by social media. We share all things forum related on our social media pages, so please check that out. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. And remember, wise investors, to keep safe, and slow and steady wins the race. And goodbye, everybody. Thanks for tuning in. Appreciate you.
The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum, investing in Jamaica.